Welcome to Trading Nation. I'm Eric Chemi. Today, let's take a look at the broad markets, bouncing on Tuesday after seeing a brutal sell-off to start the week. One of your next guests is dubbing it Turnaround Tuesday. Gina Sanchez is with Chantico Global, and Matt Maley is here from Miller Tabak. Matt, I'll kick it off with you. What's your outlook here on the S&P, and are you the guest who's calling it Turnaround Tuesday?
Well, I was raising that question because we have seen a couple of turnaround Tuesdays actually in both directions over the last couple of weeks. And we could get a bounce here because nothing moves in a straight line. However, I'm still more cautious on an intermediate term basis. I just think, there's too many uncertainties in the world right now. I mean, remember back in January, we were kind of priced for perfection. And when the February sell-off came around, people were saying nothing had changed. I actually thought some things had changed because the long-term interest rates have moved above their multi-decade trend line. But on top of that, since then, we have this issue with regulation with the technology stocks. We have widening of credit spreads. We have the flattening of the yield curve. And, of course, the Fed is shrinking the balance sheet. So these things have changed. Again, it doesn't mean that we're going to have a repeat of 2000 or 2008, but it does create uncertainty out there, and it also creates some uncertainties because a lot of these issues aren't going to go away anytime soon. Creates uncertainty about what the earnings are going to be going forward. So I think that we've still held above that that trend line going back 2 years, above its 200-day moving average. But I wouldn't be surprised if we saw a 15% or even a 20% move off the highs before this thing finally bottoms out.
All right, Matt, thank you. Gina, let's turn to you. What do you think? Are you buying the Turnaround Tuesday concept?
Well, actually, I agree with Matt's cautiousness. I think that if you take a step back and look at the broader world, we are seeing at least the economic expansion peaking out in the rest of advanced economies. The expectations in Europe are already well ahead of what's actually happening. Japan is also coming back, and here in the U.S., we are removing monetary accommodation. We are not quite seeing the kind of peaking that you're seeing in the rest of the world because we have had the fiscal stimulus. I mean, we have had tax stimulus. However, that is, we can't forestall it forever. At some point, we will have to sort of face the fact that what goes up must come down, and these expansions don't last forever. And the market was priced for extraordinary perfection. I completely agree with Matt on that. And so I do think it's time for us to sort of take a step back and say, okay, how much of this is demand-driven, and how much of this has been the result of this extraordinary fiscal expansion? Now that we start to pull back the monetary accommodation, the fiscal accommodation, what's really left at the end of the puzzle, and how much is it worth? That's the question that the markets are asking themselves, or at least starting to ask themselves.
But what's the answer?
I think it's lower than it is today.
Okay. Okay, lower than it is today. Thank you, Gina, and thank you, Matt. Thanks for both of you for being here today, and thank you for watching Trading Nation. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.